At the height of this inflation, everyone is feeling hopeless, and I totally understand that. What if it is still possible to earn money despite it? What if I told you that you could still make your millionaire dreams come true? I don't want to exaggerate that this could magically appear in your bank account because this doesn't happen in real life. But the real deal is that you can still really keep on earning despite the ongoing inflation by making smart steps in your investment. What are they? You'll soon find out. Today we'll be sharing with you this video about how you can still earn your millions despite the ongoing inflation by making these smart steps as per Warren Buffett. We'll be dividing this video into two so we can explain it more instead of giving you a general perspective. So for this video, we will be talking about the investment types you should be avoiding. Stay tuned as these tips come from the man himself, and that's right, Warren Buffett. During this inflation, I understand that almost everyone's minds are in a frenzy right now. The products are rising and some companies are cost-cutting just to keep up with the budget to continue operations. Some are even just thinking that having a YouTube account, blogging, can earn them millions in just a day or a few weeks. But the thing is, it all takes consistency in your effort. However, with investing, it is quite different. You leave your money at the right company at the right time and it grows. No effort is needed. However, you'll be needing to make smart moves to make this successful. Going back, this framework is referred to as the investor's protection against inflation pyramid. And we will categorize these investments according to their group. The investments listed below are the worst to own during inflationary times, starting at the bottom of the pyramid. Currency-denominated assets. Maybe this wasn't such a big surprise. The worst asset you can own in an inflationary environment is obviously the currency that is being inflated. Money that is hidden under your mattress or in a bank account will eventually be eaten up week after week, day after day, and month after month. You're going to require a larger boat. Therefore, we don't want to hold dollars in our portfolios if we anticipate dollar inflation. If you've played Old Maid, it starts to resemble that game because no one wants to sit at the losing card. Government and corporate bonds. Bonds that have coupons in the inflated currency will also struggle. It might not seem like a bad deal if I lend you $100 and say that you'll get $10 per year for that, and your full $100 back in year 10. And that's a 10% annual return. However, if we close this deal and there is a 10% increase in the value of the dollar, which is not at all unlikely given that it happened in the 1970s and 1980s, you won't receive any returns on the investment in real terms. Everyone in the United States would be ecstatic if we suddenly threw $1 million into each and every home, with the exception of those who had money invested in things with a dollar value. Following right after our list are unproductive assets. This includes possessions like artwork, a home, gold, etc., since they should maintain their real value under all other circumstances. These assets are not useless to own during inflationary periods. They won't boost your purchasing power either though, which is why they don't move up the pyramid past this level. According to Warren Buffett, you shouldn't be excited if you take all the gold in the world and place it in a cube. It is not going to do anything for you. Any of the non-productive assets are the same. That rare painting will still only be one rare painting in 10 years. It will never multiply, unlike investments found further up the pyramid, which have the potential to do so over time. If you want to accomplish more than just maintaining your purchasing power through unproductive assets, you will have to undertake a very challenging task. You will need to predict how terrified people will be of inflation in the future. Actually, the situation is more intricate than that. A quick game will make it clear why this is a challenging task. Productive assets. These are resources that generate worthwhile services or goods. You are aware that Warren Buffett enjoys making investments in stocks and companies. However, not all businesses are created equal. The first kind of business you should avoid in an inflationary environment is one that needs massive amounts of additional funding in order to survive. Unfortunately, most businesses will struggle to survive inflation in real terms. Over time, their income may increase somewhat, but they must continually invest more money in the company in order to maintain their position. The worst kind of business is one that constantly requires you to put more money on the table while not increasing your earnings. So here's an example that will hopefully help you understand more about it. Sandra is selling chocolate at her school. So every year, she orders from Alibaba a package of chocolate worth $1,000 that she will be selling for 12 months. While her profit margin is 10% after selling for a year, meaning while she buys another number of chocolate for the next year, she continuously earns $100 back. So now let's take a look at what happened to Sandra's business if a 10% inflation happens yearly. The next year, Sandra tries ordering the same worth of chocolate, but then notices that the prices have increased due to inflation. So Sandra puts all her money in, including her returns, to get the same number of sales. However, if you've noticed, Sandra isn't really getting anything out of selling her chocolates, and she isn't really earning anything with her 10% price. The next type is companies with no pricing power. The business that, despite periods of inflation, cannot afford to raise their prices. Wait, shouldn't inflation increase the cost of everything? The answer is yes, but it frequently does so with a significant time lag. For instance, if a person notices that a barber is raising his prices by $10 annually, they might decide to get a haircut themselves, forgetting that their own pay has increased by the same amount. For businesses with financial difficulties, bankruptcy may result if costs rise with inflation but sales do not. This one should go without saying. Owning a company that owns a significant portion of the assets further down the pyramid will also make it difficult for you to survive periods of inflation. This is not just a hypothetical scenario. On their balance sheets, banks, savings and loans, and insurance companies all have large amounts of cash and bonds. Inflation was a contributing factor in the savings and loan crisis. Wikipedia states that from 1986 to 1995, 1,043 out of 3,234 savings and loan associations in the United States failed as a result of the savings and loan crisis of the 1980s and 1990s. Do you think this is the end of our video? We haven't really reached the best part yet. So stay tuned to our next video, because there we will finally be talking about what are the good investment decisions which you can make that will help you earn your millions despite the ongoing inflation. Don't forget to leave a comment to show us how excited you are to watch the next video that will counter these worst assets to invest in, as I've mentioned. Also, show us your support by leaving a like, subscribing to our channel, and ringing that bell icon so you'll stay informed of the continuation of this video. This is your 3 Towers Investing channel. Thanks for watching and see you soon.